I'm 680 News Senior Business Editor Mike Eppel. We saw some records on the financial markets today. TSX and Wall Street benchmarks all at all-time highs. Number of factors lifting the exchange benchmarks to these records. Again, investors sort of dismissing the economic risks related to the coronavirus and the dent that is causing on China's economy. Even though U.S. Fed Chair Jerome Powell, in his testimony today on the economic fortunes in the States right now, he says that they are watching for any type of spillover effect on the U.S. economy. The economy there, though, durable enough to handle any near-term downdraft. So as a result, we saw the Dow, S&P, NASDAQ all into the record books today. And the TSX got a lift from a rebound in the energy trade. The price for oil bounced back above $50 per barrel U.S. and up around $33 per barrel in Canadian funds. Yesterday, it was oil at a one-year low related to slumping demand in China. Top performer on Bay Street today, Teck Resources, the company which currently has a proposal to build a massive oil sands project in northern Alberta worth about $20 billion, awaiting a green light from Ottawa for that project to go ahead. A letter sent by Alberta Premier Jason Kenney to the Trudeau government warning of the potentially devastating impacts if that, from a financial standpoint, if that project isn't given the go-ahead. Question, though, is it economically viable with oil as low as it is right now? Some analysts are saying that for a break-even proposition for that oil sands project, you'd have to have oil up around $65 per barrel U.S., and again, it's much below that in current market valuations. Teck Resources shares, though, today up by about 7%. Under Armour, warning of the effects of the coronavirus outbreak in China on its sales in that country. It says it could cost upwards of $60 million on this quarter alone in slowing sales for Under Armour. And this is a company that has recently gone through some management changes. They've been looking at reorganizing and restructuring, might pull back on the idea of putting a new flagship store in Manhattan. The share price today down 16%. in U.S. trading. And a red flag for Canadian consumer confidence with a near record for the number of Canadians filing for bankruptcy in the final quarter of 2019. The federal regulator saying that there were 35,000 insolvency plans filed by Canadian consumers, with Canadian consumer debts now totaling $2.3 trillion. This is an issue specifically if interest rates start to climb anytime soon, which would just put further pressure on Canadian consumers to be able to pay the monthly bills. From the 680 Newsroom, I'm Mike Eppel for City News.